Welcome investors to the 40 Finance channel. The stock market continues to trend up, and a lot of people, including myself, feel like things are getting pretty hot in terms of valuation. I know for me, I'm picking off a couple stocks here and there, but for the most part, I'm really just saving my money at this point, just in hopes that maybe there'll at least be some sort of correction. So for this video, I thought we'd look together at the most overvalued stocks in Morningstar and kind of compare them against the usual metrics that I look at on this channel to see if I agree or disagree with some of their analysis. All right, so here's the Morningstar stock screener. I get access to this, as I mentioned before, through my public library. So check yours out to see if they offer a Morningstar membership or access to the database. But I went ahead and this PFV calculation is Morningstar's price to fair value. So you can see I've chosen the over 2, greater than 2. And basically what this says, if you're greater than 2, you're at or more than 2x what Morningstar would equate to fair value for any given stock. So 2 times the fair value, that's the names that we're going to have on this board. Scroll down here a little bit, and we've got 19 names. They'll be sorted in alphabetical order. No, they're sorted by price to fair value. Saw that Aligned Technology and thought it was maybe alphabetical. And you see our names, and we're going to take a look at these, just pick off a couple of them, and I'll compare them against some other metrics to see, do I agree or disagree. So we'll start with Aligned Technologies. All right, so here we are at Aligned Technologies. I peeked at the Morningstar site earlier. They have a fair price value of $265 for Align. The last time that was updated, though, was back in May. So let's just assume it's rounded up because they've had some pretty good performance. And their core thesis is that the growth is not sustainable, and so it should not have such a high valuation multiple on it. So let's take a look at where we are in comparison to history for Aligned Technologies. Trailing PE today is at 80. You've had all over the map, really, over the past several years, 39, 40, 67. If we go back to maybe 2019, prior to the pandemic, you were at a 53. So I'd say maybe 53, 54 on the trailing. But more importantly is the forward PE, because that's what we do here. We look ahead. Several years ago, 30 to 50 on the forward PE. 2019, you came in lower at 42. Last year at 63. So it's definitely running at all-time highs. I'm not sure if it's twice the valuation to get there, but let's just assume something in this range, 63 to 42. All right, peeking over at Seeking Alpha, because they give us a good idea of what analysts are expecting. You see here the end of this fiscal year 2021, EPS at $10.99. That puts forward PE at 65. But to me, that's sort of a short-term forecast. The real forward PE should probably be here, December of 2022. You got EPS estimates right now, $13.43, a high of $14.43. If it landed at consensus, your forward PE would be 53. So I guess for me, when I look at this, I don't necessarily see 2 times overvalued. I mean, if we went to even 2019 and we just said 40 times forward PE, or 2017 and said 50 times forward PE, 50 times 1343, have to get out the calculator for that one second. 1343 times 50, that can give you 671 as a price target to maybe get in for fair valuation in my book. But I would definitely say there's a couple points that could run off of this stock, but perhaps not 2x the fair valuation. All right, next on our list, Dick's Sporting Goods, ticker symbol DKS. And you see the stock here at 146.04. The Morningstar Fair Value currently sits at 58 for this stock. They did mention in a recent analyst report they expect that fair value target to go up by about 10%. So let's just say they're targeting $65 for the sake of argument. So again, well over the 2x threshold if you are using fair value as your buy point. Now let's see where DIX has traded in the past. Just skip ahead to forward PE for this one. Currently at 1776. If we go back to pre-COVID times, you're probably in the neighborhood of, let's just say 11 to 13. Maybe you could give it a bump in 2021 because of low interest rates and lack of other options. So we'll say 14 might be acceptable in the current environment. Now on the Seeking Alpha side, January of 2022, we'll call that the short term. But forward PE for January 2022 is actually only 1106. But look at what happens next year. So this is a red flag no matter what stock you're interested in. We've got a problem here on year-over-year growth for EPS. And it's not in the scope of this video to figure out what that problem is. However, I did check and it is being reported similarly on multiple sites. So January of 2023, next year's fiscal year earnings, the EPS could decline. Now at 935, what's that forward PE level? We know the EPS is going down. 1536. If you remember going back to our historical trends, we said maybe 14 was acceptable for a stock like this. So I'm going to say 935 times 14 in the current environment gives you a price of 130. Today we're at 146.09. So again, probably not 2x fair value price, but I would say that for me, I wouldn't be interested in this stock regardless of where it fell because I'm not interested in the negative earnings growth. All right, next one on our list, Moderna. Let's take a look at where they've been trading at. All right, Moderna, so we've got a price today at $3.95. I did take a look at the Morningstar Fair Value, and they're coming in at $1.59 for Moderna. And of course, this has been a big year, though, so we're going to struggle, I think, with historical statistics because the game for Moderna has changed so much with the vaccine. But let's just take a look at how it has trended. So first of all, this company is only recently profitable, potentially just this year, as a matter of fact. And they have a forward PE of 13. So we don't have a ton of data on here to compare to, but I want to show you where the problem lies with Moderna, and it's very similar to Dick's Sporting Goods. All right, back to Seeking Alpha. This fiscal year, $30 per share. EPS estimate, forward PE of 13. Sounds great, right? I mean, I'd say that's right in range of what you would hope for. December of 2022, next year, EPS drops 10%. So at today's price, your forward PE is going up, which is a problem. Then you get into the out years, and depending on how much faith you put in this EPS estimate, you can see some major drops in earnings per share, which of course would raise your forward PE. So I think with Moderna, I would say like today's valuation through the end of this fiscal year is probably right on target, to be honest with you. The catch though is, will they be able to grow it or even match it next year? And the out years look even shakier. So for me anyway, I would be out on this stock. All right, next on the board is Square. Square trading today at $271. The Morningstar Fair Value on this stock is $119. So they've got Square well above 2x at its current price. Let's take a look at how things have trended. It's going to be another one where it hasn't been profitable for very long. They sort of started in profitability in the pandemic year as people started using Cash App more and more. Looks like this year we're sitting at 163 on our forward PE. Price to sales, if you want to go that route, has been anywhere between 6 and 13. Perhaps we can settle on like an 8 or something like that going forward for price to sales, knowing, of course, that investment options are limited. All right, on the Seeking Alpha side, we have December 2021. Looks like they'll land just shy of $2. I assume that'll be non-GAAP EPS for Square. Huge growth on the EPS line, forward PE of 143. Next year you hit 230. You get to 116. All right, for this one, let's see what's going on in price to sales, because I have a feeling that's where most of the support is coming from off this. If they hit 19 billion this year, it'd be 100% growth in sales, 6.47 on the forward price to sales. I think we kind of came to the conclusion that maybe 7 or 8 would probably be fair, and that's this year. So if we talk about next year, 21.5 billion as the consensus, and with that, your forward price to sales at 575. So at least for me, I don't see like a crazy valuation for Square. I think that what you have to be comfortable with is this EPS growth is glacial, okay? In terms of what they're doing on year-over-year growth and the billions of dollars at hand, this EPS, I would say, I would appreciate if it grew faster. And I own Square stock. There would probably be a price with Square stock where I'd be happy to cash out and just stick with PayPal. But for now, I'm hanging on, and at the current price of $271, I would argue that it's roughly fairly valued. Probably wouldn't start a new position here, though. I think if you can try to get it certainly under 250, you just need to give yourself some room to run with this one. All right, last on the board for today, we're going to look at Netflix. And Netflix should be interesting because for me, I think that there was a time here recently that Netflix was wildly undervalued, very similar to Amazon. They're trading about $500, and if you woke up on the right day, you could get it for under $500. And I think what we'll see here, though, as we switch over, the market caught up with it a little bit here at $597, and Morningstar gives it a fair value of $250. Their posting of that fair value price was back in July, so I'm not sure how much has changed, but for the sake of argument, we'll say that it rose to $300, even though I have no statistics that it would insinuate that. But either way, you're right there at 2x value, and that's even with me inflating the Morningstar Fair Value. So let's dig in and see what we can tell about Netflix trading patterns. This is one that obviously was a superstar growth stock. I would argue that it's still growing very, very strong, particularly at the EPS level. But like all things, the growth is slowing a little bit, so you can't pay the same valuation that you paid back in 2016 here. So forward PE currently at 55. Last year finished about 61. Same with 2019. Same with 2018. But you can see the little ticks that it's lopping off around the way, right? So a 55 forward PE today, I would argue is about in line with the progression that Netflix has made. Now let's take a look at their earnings projections to see how this price might hold up in the future. All right, back over to Seeking Alpha. This is what I happen to like a lot about Netflix, is it's starting to turn into a cable company. And as much as people want to focus on user growth and whatnot, the monetary growth and the earnings per share growth is what I personally am seeing out of Netflix as it matures. Now, you might laugh about the statement Netflix becoming a cable company, but if you watch the stock market at all in the 90s and early 2000s before streaming, cable companies made a ton of money. and a lot of them were dividend stocks, and they were very, very popular. I understand that their time ended at some point, but I don't see Netflix going under anytime soon. All right, right off the bat, you see for this year, 10.54. That's where Yahoo got their forward PE of about 54. We look ahead to next year, and 22% EPS growth brings you to 12.89. So that would drop your forward PE to 45. Now, if we assume that every single year in this growth stage of Netflix that forward PE needs to come down a little bit, then I would take this 45 and the projection of about $13, and I'd say, hey, Netflix to me, probably about fairly valued at $5.96. Definitely would not be one that I would say is wildly overpriced. If I were to start a new position for Netflix, though, probably would not buy it here. I'd like to see a little bit more room to run over the long-term holding period. So for me, I'd be looking for a bargain, certainly under $5.50. And we also know that it traded very recently in like the $5.20 range. So perhaps if there's a market correction, you could pick it up then. All right, investors, so those are Morningstar's most overvalued stocks. We went through each one, shared my opinion. Let me know what you think about these stocks below. And as always, please give the video a like, subscribe to the channel. Thank you to everybody for your support. We'll see you on the next video.